Hello, this is Ariela Karmel, and I'm at Calcalist 2024 Forecasts event in Tel Aviv. I'm joined by Moran Alon, the CEO of Pictet Wealth Management in Israel. Thank you for joining me, Moran.
Thanks for having me today, Ariela.
So can you start off by telling me a little bit about Pictet and your activities here in Israel?
Of course, so Pictet is the largest private bank in Europe. It manages $700 billion of assets. It's held by 8 partners, and it's rated AA minus. It focuses only on wealth management and asset management, so we don't have any commercial activity, but this makes the bank very strong in terms of its balance sheet. So we won't see any cases like what happened last year with Silicon Valley Bank or other banks, and this is like a really important point at the moment. We've been in Israel since the year 2000, and we opened our Israeli office at 2013. So we've been here for a long, long time, almost 24 years. The idea is that we've been focusing, we've been working with most of the large families in Israel, but we've been really focusing on the tech entrepreneurs in the last years and really making sure we're in the ecosystem. We believe that we'll see, massive scale up in the Israeli economy in the next few years. So I think this is the largest focus for us in the last few years. I think one of the advantages of Pictet is that we really provide personalized services. We have a holistic approach, so we focus on 3 pillars. It's the wealth, investment, and banking services. But it's really personalized for each client. So we look at, the client exposure in terms of his business and personal investments, and then we provide an holistic solution. The bank, it's really important for the bank to stay really dynamic and keep moving with the market. And, sometimes with large organizations, you're really stuck in processes, and it's really hard to stay in and become dynamic. So we really have this entrepreneur approach that we want to change and evolve with the market in terms of the products and investments we're offering to our clients. And because we're a private bank, it makes it much easier. So we have 8 partners that are making the decisions for the bank. And so we keep evolving and, changing with the market.
Now, in terms of the Israeli market and the Israeli tech sector, are there any particular areas that you guys are focused on in terms of investment?
No, so we don't invest in Israel at all. So we invest only outside of Israel. It's a global investment, and it's really about first of all your asset allocation in terms of currency. So some of our clients have asset in Israel and outside in Israel. And then you look at geographies, where in the world you would like to invest, and then in what products. So the idea is to have an asset allocation between currencies, geographies, products, and we really balance. So you need to look at, what the client is investing in his business. And then you need to make sure that he's, has an asset allocation that will complement what he's doing in his day-to-day, entrepreneur business life.
Now, has there been any impact in terms of your activities since the war began?
So we've been in Israel for almost 24 years. We believe in the Israel economy. The Israel economy, will stay strong. There are cycles in the market, so our strategy won't change. We think we're here for the long term. So no, the answer is definitely not. That's all.
And can you speak a bit to your outlook for the coming year and kind of your predictions for the market?
Yeah, of course. So obviously in 2023, we saw a peak in interest rates, in inflation, and now we're starting to see, expectations about interest rate cuts in 2024. So the market is expecting 4 to 6 cuts during next year. So this leads to, really changing the way you invest. So the first thing is to move from cash to duration. So if in the last year, investors enjoyed from high rate in deposits, now the main thing is to move from cash to fixed income, because next year, if rates will be cut, you won't be able to enjoy those rates. So investing in a fixed income portfolio will lock in now 5.5%. In a short duration portfolio, going up to 5 years will give you 5.2%. The idea is to do it now. This is the most important thing, because if you want to stay conservative and benefit rates today, the idea is to lock in rates now. The second thing is when you look at equities, so we really like single name stocks and not investing in indices. The idea is that we're looking for cash-generating companies that will have enough, cash to do dividends, payouts, and buybacks. And so we really like to cherry pick the stocks that we'll invest in. If you look now at multiples, so we see US is a bit expensive. The multiple averagely is now 19, whereas in Europe you see 12.4 multiples. So we think Europe is a bigger opportunity at the moment. The third thing is that if you look at large cap or small cap companies, so on the small cap companies, we see most of the debt that was taken in the last year in order to get finance was taken in a floating rate. So their debt has gotten more and more expensive, and this makes them more volatile. Whereas the large cap companies have most of the debt in a fixed rate, so they're stable and we'll see less volatility. And if you look at the geography, so US and Germany, we observed that a higher percentage of the debt was taken in fixed rates, whereas countries like UK and Scandinavian countries, the debt is in floating rates. So again, US, Germany more stable, UK, Scandinavian countries less stable. The last thing, two more points. So AI in technology obviously was a big driver of the markets in 2023. So it was driven by the magnificent seven, stocks like Nvidia, Google, Amazon, Facebook. So we're really focused on AI also in 2024. But we're looking for, opportunities in specific sectors like medtech, robotics, diagnostics. So we believe that they will have more scale up during 2024. The last thing, and I think it's a very important theme, is elections. So 2024 will be the year of elections. We'll see elections in the US, Mexico, Australia, India, Russia. Election brings a lot of volatility in the market. So each government will have a different policy in terms of interest rates, government debt, inflation. We're sure that U.S. Government will make sure that labor market is still very stable, inflation is kept low. But in general, we'll see a lot of volatility in the market, and this will bring a lot of investment opportunities.
Great. Well, on that note, we're going to close the conversation. But thank you so much for joining us, Moran.
Thank you, Ariela.